Good afternoon, Scott Henderson, shooter. Welcome to Swing Trade Notes. We have some great insight today. Let's see which direction this market is headed. Of course, at the end of our presentation, please do review our disclosure. All right, let me start with the dollar. We get above about this 150 bips kind of thing, we accelerate to the downside. So right now we do have a bearish emphasis on equities as a result of the dollar. On top of that, we have a number of other catalysts, which we'll go through here in a minute. First thing, let me jump over to the S&P 500. I just want to spend a second here because we are on the cusp now. We have a little ledge right here, and I'm still going to stick to the weekly chart. Well, actually, no, I'm going to come down to the daily. Changed my mind. So we are on the cusp of an acceleration here. So we broke the uptrend. We have the peaking drive 1, peaking drive 2, peaking drive 3. Right now, my golden box is back to 679. Now we have a gap right there. To be honest with you, if this ledge breaks right here at 698.97, we are now talking a failed breakout. And it really doesn't, there's no pattern you can come up with that. But the larger structure that we could potentially get as a drawdown would be something more in this direction. So we have a big catalyst to the downside. It could take us down to 587. I just want to point that out because we want to watch our levels very aggressively, and hopefully you guys did trim a little bit. As we had noted, hey, I think it actually was right here. I said it's a good spot to trim again. That's right now. I just think SpaceX is gonna suck the liquidity out of this market. Now it's gonna take some cojones to buy the dip right after SpaceX of whatever we have in some of the names, because the catalyst is not really SpaceX. SpaceX is a secondary issue that we're dealing with right now. So that's the challenging part of where we are. But let me go back to the weekly and just emphasize what I see here. The overall trend has not broken. Just this particular uptrend, we've now pulled back. We now are putting in a corrective wave 2. However, the most likely case is it does become a leading diagonal and we do something like this right here is what it should look like. Should come in, do something like this, and then we put in a top. And that would be a solid topping pattern for what we're seeing in the concentration of certain names, because we get a little air taken out of the finance side, the debt wall with some of these mid-cap firms. That's not going to hit in small quantities. There will be several dozens to several hundred of firms who all of a sudden can't roll their debt, or they have to roll their debt at a really crappy deal. And the first sign, like I pointed out last week, was Google accepting B+ when they're a AAA rated company for a deal because nobody would raise the capital. And then I'm forgetting, it was one of the Asian firms. They had done a request to borrow against their SpaceX shares, and they were bottom line turned down today. So, we're starting to hear that echo come through the markets a little. All right, jumping over to the NASDAQ. Now, this is where I think a lot of the pain will go. I'm going to come down to the daily here. Our fib box comes back to about 628 here. Very similar look as far as where we potentially could go if we lose that shelf. I just think we have all the catalysts in place. That's one of my biggest concerns. So, 533 is viable on a major pullback, and that is equality for me. However, the dip buyers are still present, and they were trying to hold this particular shelf. We went below it. Today, our body closed below that shelf, so it's broken, as far as the NASDAQ is concerned, which is a little more aggressively broken than the S&P. All right, let's take a look at TLT. Now, we started to roll back down, not aggressively. I still think we take out these lows. The reason is because with the dollar pushing, it should theoretically push back to it. We should get an all-time low on TLT with what's going to happen with the dollar based on the dynamics of what happened to the street. At least that's my perception, right or wrong. But we have clearly, we had a little bit of a pop on going into the FOMC last month. And, that's something that I don't know that we're going to see when we go into this next meeting. So that's sort of my thought. Let's look at Bitcoin. I think Bitcoin's going for its final leg lower. I don't know if we get this absolute crash or just a dip flush buy kind of thing as far as a look. Let me come out to the weekly. But right now, that ending diagonal is pretty consistent. We've already so technically it could be done because quite often ending diagonals just overshoot your prior low. This was our prior low. at 60K. And notice that it happened to be right at 60K. However, more of an equality type move would be back down here to about 48K. So it's going to be up to Mr. Market as far as that's concerned. All right, let's jump over to, now I'm taking some heat for the first time in a while. Just put it plain and simple. However, I'm trying to stick to my guns because I have such a small percentage in the market right now. It's not even funny. It's what it is, and so far it's been the right choice at this point, even with the rallies, because I would have given it all back. So Oracle, right now I have $200 cash secured puts. Looks like they're going to get put to me for July, but that's the way it is. That was my thought. My next tranche, I'll try it again around 178 is my thought. I do like Oracle back up to the upside, even though it's gotten a little bit of a drawdown. After this kind of flush, pretty much the sellers are gone. Now we're just managing this uptrend. What is it? So we have this peaking drive 1, peaking drive 2, peaking drive 3. So the most likely scenario is that we get a pullback to that box. But if we get a corrective impulse off of that, just draw it up a little bit. I mean, we could do something more like this for the upside. But still, it should be aggressive back to the upside once we find that floor, as far as my thoughts concerned. Now, Hive, I'm just sitting there. I wanted to add 2 or 3 times, but I've decided to wait till after SpaceX because at this point, it's done nothing wrong. It took out my stop that was there, but I decided not to trim it because I wanted a piece on in crypto just in case something happens. So Hive was the name that I decided to hold. And the main reason is because they are a candidate for a power conversion to AI. And that wall is also coming upon us where the data centers are now looking for alternatives because everything's so far out. If we look at nuclear, et cetera, I mean, we're talking 2027, 2030, and, the capacity that we're already running into, they are going to aggressively shop for alternatives for power sources, existing structures to just put AI chips in there. Blockchain miners are just the absolute perfect because they've already got the data centers built. All you have to do is go in and switch the cards out. The power's there, the cooling's there. I would venture to say that within 72 hours, they can flip it over to AI. So, and ultimately my thought is that they start buying these miners to convert them to AI data centers. Is that sort of my thought? Now, Zscaler, we're getting pummeled on this one as well. I'm just sitting there. I'm not changing it. It'll probably get put to me. I've got 155. So that's what it is. I'll scale lower if we get back down here around $100, add another piece on there. Because this, as far as the scalers for AI, they will get or it'll be a large block order. That's all there is to it. And there are limited solutions. And with SpaceX, Catalyst, as far as timeline, we're looking at 3 to 5 years even on SpaceX deployment where we have any comparison. We have roughly 100 gigawatts on Earth right now. By the time 2030 hits, we may have 300 gigawatts on Earth versus what's in space. And right now, SpaceX is talking about 15 to 20 gigawatts within 3 years. So, what is that going to be? 8 to 10% of our capacity, even though it's the biggest news in the world, biggest IPO that exists there. Realize a lot of people are overlooking where I think we go. And I think Zscaler is one of the big benefactors. SEI, of course, is where I think Musk buys it. So I'm sitting there. Interactive Brokers is totally based on the increased revenue from the pattern trade removal and also the fact that they've jumped into the prediction market. So they have 2 major streams of new capital, which has not been proven, and that will get priced in at some point. So honestly, I want a bigger position than I have in them because I do think we take out this 1618, and I think it's a pretty solid bet. Sentinel-1, we got stopped today. I'll leave it there. I still want to build a position back in here. However, I'm not sure if I'm going to wait to back below $13 until this market calms down a little bit. But that's pretty much where we are. All right, let's jump over to our request. Now, Rex, I think we pull back to the shelf. However, my golden box is back down about $30. Let me talk about this for a second. Let's talk about the structure here for a second because our charts are changing. A lot of broadening formations are appearing. So there are different levels of Fibonacci extensions for our golden box that can appear. So let me bring up the Bollinger Band tool for a second. Now, as Elliott wave advances, you have peaking drive 1, peaking drive 2, and peaking drive 3. So, and I'm showing the Bollinger Bands because I wanted to give a visual of, the thought of how it corrects. So when I come in and I put the golden box here, typically I'm measuring one of these legs. So I'm going to come in and measure the current leg that we're in. And this means nothing's broken, nothing's failed, right? So the first golden box is right here. Now, once we start seeing this kind of noise, my immediate push is I push it down to the entire move, because my assumption immediately is, now with this noise, I'm less bullish and I'm more inclined that this is going to be a failed breakout and we get a major back test. So there, in every chart that you look at that I've marked up, there are two boxes. And I want to explain the difference there, because a lot of the charts will just have this fib box on here. Some will have this fib box, and some will have both. And what I'm basically saying when I put both up there is the history of the chart implies that it likes to retrace. And let me use an example. For example, let's use this retrace here from this last leg back in June of 22, right? So that retrace box puts us right here. We overshot the 70 fib, which means this likes to be impulsive. Rex likes to be impulsive as far as the drawdown is concerned. So we just want to recognize the history of what the stock does. And when you see my map, that's explaining it that way. All right. So maybe you take a shot here. I'd be small. And your first, starter position to me would be around 30 bucks. All right. DAR, same scenario. I've got it accumulated, get above into this box. However, it's solid flag. It's done nothing wrong. Breaks below this, I changed my mind. As far as the upside, if you look at the structure, what I have drawn as far as the whole picture, 3 becomes our longest wave. 5's probably a little elongated as far as the timeline, but that's when we start seeing this break extended flag, that sort of implies. And we have a lot of noise here, and I think it's still coming on because of the sulfur acid issue that, we don't have the Strait of Hormuz resolved. And, we have a lot of pain ahead of us. So it's hard to hold any positions through this because we do not have any kind of precedence to draw upon where we are right. We have not been there. Even the oil blockade was not the same as what we're going to experience now. So on one hand, we have the largest AI industrial revolution that's ever occurred as far as mankind's concerned, but we don't have the water, we don't have the energy, we don't have the fuel, we don't have the metals to build it. So to a great degree, what we're seeing is there's a lot of hype in what's coming out of it versus reality of what conditions really happen. Sort of like you going out with your car. Today, it's got a full tank of gas, right? Tomorrow, it's got an empty tank of gas and you try and start it. Well, where's the car going to go? Well, it's going to go nowhere. Doesn't matter how expensive the car is, how much you've invested in it, doesn't matter. It's going nowhere. That is the circumstance we're in as far as some catalysts. So, I'm more inclined now, especially with what the SPY and the NASDAQ has just done as far as the shelf that we're testing. I'm more inclined to go deeper, right? Trim whatever is pulling back. Unless it's relative strength and just solid, holding, not breaking back, I would be trimming any weakness, because the most likelihood is that we get that deeper drawdown and it pulls back at this point. And that's when we just want to get the heck out of the way. All right, let's look at copper in SCOO. I think 128 is a viable price here. Now, what I see on this is an ABC corrective leg playing out. Pretty solid, as far as the look. So I see something like this right back down to that box at 128. It lines up with the fib. Note how I measured the fibs from the entire leg versus the piece. For example, let me pull this up. Fib would have been measured from here initially. So once that box retraced, we got a confirmation of that ABC. Then I extended it lower. So that's my thought, 128. Copper is going to be a big driver. But again, I think our timeline is, I'm going to say at least 3 to 6 months out, I think. And nuclear, even though all, everybody, well, not, I shouldn't say everybody, all the AI models that I've been running are telling me to start getting positioned for nuclear. But I'm having this argument like, well, how? If they don't have the chemicals to get the raw materials out of the ground, and we don't have the raw materials to build, Okay. Even if we have a projection for December 2026, how long is it going to be delayed? So my thought is I think we revisit that, specifically nuclear the first of the year, unless you're willing to take the heat between now and then. And that really that's what we're really asking ourselves. Copper, are we willing to take the heat now to get a position in because we think it's going to break out? And from a technical standpoint, I don't think it's going to break out here because of how it's responded. You have your wick off to the high side, pretty significant rejection right here. We're going to at least test this floor at 150. Now, 150, we get a little activity and we get a nice wick off there. Yeah, that might be worth taking a shot, because then this could just be a wedge that's forming out. But until that manifests, I'm more inclined to believe it'll be back to about 128. All right, let's look at NXE. I think it's done. I think it's pulling back. I think it's going back to the 775. And to be very candid with you, it looks like a reversion to the mean candidate because it's done it already, And the only thing that we have here, we have a double top kind of thing. We don't really have a double top here yet. So again, this is a sector, an entity, a company that I have a very hard time getting a macro micro read on it, because it is so dependent on debt and borrowing money in a declining market there. In other words, they're just not, it's disappearing, right? There is capital out there, but it's going to be very specialized projects that are already generating cash, and they have multiples they can see. There's not going to be any support for hyperboil. Hey, we're going to build this pie in the sky plant. We're going to do this. It's gone right now. We might get it if SpaceX holds and everybody gets rich off SpaceX and it continues to go to the moon and it doesn't do what every IPO has done in history. It has its huge pop, then it fades back to the 78.6 fib at least, and quite often it reverts to a reversion to the mean, with almost all IPO have very extensive drawdowns, which is absolutely going to spook the markets with 1 trillion, 1.5 or 1.7 trillion on the table. So, NXE, I'm building the macro into my thought here, but technically I'd like it back at 773, and I'd probably want to wait and see that the 645 shelf holds, because they're an entity, I think, that has financing difficulties moving forward. All right, LEU has broke the upper side of the trend, reversion to the mean candidate. I've now got the buy box back down at 60. BE, I think it's going to roll over here, to be candid. I think we got 194 coming. Once this shelf, once these wicks gave out, there was no, buyers jumping in here at all on this candle. None. On this last week, none. Okay, so that's a change in demeanor as far as tape. We don't have that anywhere in this tape. Okay, so this has the potential of becoming a failed breakout or a head and shoulders, which is always. I'm seeing a lot of broadening formations and a lot of potential head and shoulders. So how you measure head and shoulders, it'll do something like this, sort of a diverted one, but if it does, it's most likely places that it comes back to 75. So we build off this flat and then roll over. So it might be time to take some profits on that one and just call it a win. And realize the high beta, which I would classify BE as high beta is just going to get demolished if we have a major drawdown related to space. It's just going to suck it up. And we have not seen this type of catalyst potential in the market. And I don't recall this even back in the Great Recession. It was a slow meandering breakdown. It wasn't aggressive. We didn't have these pops in the range. And, a lot of the other traders I talked to have never, though some of the guys trading for 50 years, have never seen the dynamics that we're dealing with now. Now, Rocket Labs did trigger today for a 50% back. However, I don't like it with the way RSI looks and the way it's not done. All right. But it also doesn't look done to the upside. The challenging part about ending diagonal is there are times you don't put in a new high. And then there are other times you put in a high by 1 penny, right? And it's only about 25% of the time you ever come back out to take out new highs and actually tag the 1618. So once you have that broadening formation, so we have wave 1, wave 2, shallow, right? Wave 3, and then we have wave 4, it's broadening formation, without a question. That's what it is. So I typically look at it like this. If I get back to $150, I'm lucky. So I would not get interested in, you're looking at this noise right here until about 92. However, I still don't like that. I'd rather the optimal buy, even though I've got the buy box. In other words, I'm using a specific methodology that we've gone and back tested with AI. This is the structure based on LOE, Elliott wave, Fibonacci extensions, and the history of how waves evolve. And realize we're still teaching him. So I would even use the word he's still, or it is, or she, or whatever it is still in its infancy. But right now we've come up with this box. This is our first golden box. And realize there's a second golden box down here. There's a third one. There's a fourth one. Okay. The first golden box is the most likely place for it to bounce historically. And over 70% of the time, it does happen that. So those are the dynamics that we're using as far as the model is concerned. But I wouldn't consider it until 92. GLXY, the buy box, we're in it. All right. Nice 3 drives to a bottom here, right? We have some confirmation on this last drive, which I don't like. The structure here could be an ending diagonal, so I want to point that out, as far as the look, because that's broadening formation, which means we're probably going to put in another low. And I'm going to come in here and just say, hey, it probably comes down to something like this. So we get this flat. Now this ledge has a lot of support, which is where I've highlighted. If that breaks, I'd be out, because now it's a reversion to the mean candy. So interpreting what I've drawn on the charts, the reason is just this is where we are. This is where I see it can go. This is what Elliott wave tells us. This is what the Fibonacci's tell us. So we're in the first golden buy box, but the reality is it likely pulls back. But at the same time, this is a clean beginning of an impulse in a bullish supported market, which we're not in. That's where the quagmire comes in, is that the market itself is failing, and there are going to be few names that survive that. So if we get a pop off of SpaceX, which I think we might here on Galaxy, I do like it for a pop. So when you look at this stock, you're going to have to decide, hey, do I want to put the risk on the table? And my first gut instinct would be do the same thing that I did with SMH. I sold cash secured puts because I wanted a piece to the upside, because I expect there to be a lot of sympathy trades around semis related to all the numbers and all the hyperbola and everything that's coming out regarding SpaceX and these giant chip manufacturers, et cetera, and realize it's going to be ASML who builds Tesla's plant, not Tesla, just so everybody knows that. So it's, that along with the fact that we already had a pullback in a lot of those names, I think our low is in. I've got 550s. We were about 570, I think was our close today. And I only went to July. But I do like Galaxy with a shot back to the upside. But the dynamics of the market just is where, am I going to put a trade on there? No, just because of the dynamics of the market. Now, if I was down at the floor going into the circumstance, or I was down at 1176, then I would like it better, because I don't want to trade in the middle of the box here, because I don't have my resistance or I don't have my support levels that really support entry here. So now this looks like a OKL, looks like a leading diagonal now to me. So this looks like this was our 3. So I think the most likely thing is we break down to this 32. So, that stop was pretty solid as far as the structure. Hopefully, if you did enter it, you took it out. But, I would bring this. I haven't moved it down yet, but I'm going to move it down now. If we, I'm just trying to see where my fib, I already got the fibs down. It's going to be an overshoot then. Yeah, that's totally broken here. It's a reversion to the mean. Unless it gets back above this 58, it's going to keep going. It's going to flush. That is a high beta stock that probably does continue to get hit with the markets pulling back. Now, OKT, I switched it to trim today. I believe I had it as a hold before, and part of the reason was that wick off when I went through everything, even though I don't have my stop until 98.46, because I do think any type of resistance we're running into this, any beta, it's going to start pulling to the back, pulling down. So, all right, looking at UNG, it done nothing. Now, the dynamics here is the pricing, and to be candid, I'm not recalling it right this second, but Europe's winter is going to be the biggest driver for US LNG. And I don't believe that happens yet as far as the timeline. So the dynamics of UNG, it should be running with the Straits, but it's not, simply because we already are at max capacity on our. So ultimately what's happening is they're buying gas at whatever it is, $2.50 or $3 or whatever it is here in the US, and they're marking it up and they're selling it to the highest bidder, and it does not come back to UNG. Okay. Someone like LNG is going to see that more so than UNG. So if your thesis was UNG is going to go up because of the Straits of Hormuz, there's really a disconnect between UNG and the Straits of Hormuz versus where the exporters themselves are the ones that should receive decent margin increase because of those bids. Just clarifying that. But I don't even get interested in UNG until it gets back above 1670. ISOU Energy, I think it pulls right back in this box, 796. We got 3 peaking drives, 1, 2, 3. A lot of noise up here. It tried to hold a lot of wick offs here on the top. Now notice if you go back in time, we only had 1 wick off here. They didn't get a big wick off here. And then we got huge wicks here. And what did it do? It had a huge flush. So I'm considering that with this look. If this becomes a impulse down, this is the challenging part when you're holding names that are turning over. If this is our 1, right, this probably becomes our 3, and we get a decent bounce, and then we probably put in our 5 somewhere around the 2, 3, 6 down here at the low side of that box. So, 6, 7, 8 bucks, I get much more interested in that than where we are today. RSI supports lower. It's confirming MACD is wide open to the downside. Okay, Microsoft, pretty much mapping out that wedge that I thought it would play out, pretty much right there. It's a little deeper. Looks more like an ending diagonal at this point versus that wedge thought that I was thinking. So, this is our 1. All right, so this is our 1. This is our 2. This is our 3, or 5, excuse me. Very aggressive to the downside. I mean, we target these lows back down here. And, this is an alternate pattern that I was looking at. Whenever you have this distortion and you have these extensions, they're very hard to measure waves, but I think we take out this low, and I think we take out this low right here, right now, at 345. The reason is Microsoft is going to be a name they sell for SpaceX. They are. So, I would not be holding it here. If you're upside down in it, I would trim or at least sell covered calls if I was in that boat. All right, looking at ENPH, the buy box comes back about 48. However, again, this is a high beta stock. In this market environment, why? Wait for this to settle and then think about it. That's sort of my thought. However, trend support is the most likely place where I would like it the most with these market conditions. So, roughly back at 32 bucks is where is the most logical place to buy, even with a confirmed high. Realize in a flat, typical impulse rules don't apply. They tend to be consolidation patterns, XABCs, etc. Down, as far as more of a flat type build out. Clearly we put it in a higher low, and I think the alternate energy space has some room to run. But right now, it's not responding to me the way that we should based on these market conditions. So we have to be insightful about that and, recognize that, hey, it's not a name that is going to most likely move in the right direction. So let me look at MXL. I got a buy box way the heck down here at 48 bucks. Total rejection, reversion to the mean, candid, to be very candid with you, with this kind of pullback, with that much euphoria in there. I mean, we confirmed, got a divergent high right here. So you could even come in and say peaking drive 1, peaking drive 2, peaking drive 3, high and tight. It gets anything back into this box, this little box right here. Looking at AVGO, now it's taken out the stop I had noted. Basically the shelf from this impulse, from this low to this high to here. The first breakout shelf in peaking drive 1 is typically what I measure. Once that's broken, that wave, in my view, is not that type of impulse. It's something else. So what else is it likely? Well, if we come in here and we draw this out, it likely is an ending diagonal, because if we look at this as 2, which tends to tighten up, even though it doesn't mean we won't recover and get back up to that larger wave structure at some point. The most likely outcome is that we get something like this as far as the look, because this now has broadened. We now have rejected versus continue. So as soon as we took out this shelf, this flag right here, right? That euphoria to the upside was broken. So the buyers are gone, right? Now all we got are sellers, which is why we have no wick down to the low side. We come down in the daily, that should confirm that similar look. We did get 1 wick right here, and we took it out. So either we get back above the body of that wick candle at 393, or it's not going to recover, and we are clearly going to go down to 280. That's because that's it. You got gap, gap, gap. You got no room. You got no support right there. Nothing on this leg up. Your only support was here, right? We've already broken below there. Right? So none of this is all noise versus what's happened right here. Even though you have some support, a lot of people like to come back and say, hey, yeah, we have support. However, we breached it right here. Once that didn't hold, RSI is confirming lower. MACD is wide open like an alligator mouth. Maybe rolling a little bit on the low. No, it's wide open. So I don't see that recovering, at least in the next couple of days anyways, and probably not by the end of the week. All right, RDW, red wire, total rejection here. Buy box, I've got at 11.25. Double top, right? Challenge here with the double top. The most likely regression is way the heck down here off of this low. So it likely tests $2 from where we are. That's challenging being in a negative high beta environment between lending and what's going on with these behemoth IPOs that are just sucking liquidity out here. This is the name that's going to continue to go lower. Now, I noted this as the structural stop for this wave, but there really is one that's up a little bit higher. If you look at this first impulse wave, which we're testing right now. So that's, structurally, it's not broken, the current wave we're in, but the historic wave, it is right at it and testing it. And that was the reason my notes in Swing Trade Notes, I said we are on the cuffs of a very aggressive breakdown here. That doesn't mean it's going to happen. It's just all the conditions are there that kind of support that. All right, Planet Labs. Looks like an elongated ABC to me. So an elongated A, B should be pretty much equal or something shallow like this. And we come back to about $20. That's pretty much what I wanted to cover today. Does anybody have any questions? Everybody good? Yeah, I've been short, but I haven't posted them in the room because I haven't been convicted with them. I didn't have the conviction. I think the challenge shorting here is that you really have to do short duration, and that's very hard to express in chat. We get any kind, we had this last back test. If we get any kind of a pop, so here's my mindset. If you do weeklies or even go out next week and do puts, the challenge is that our corrective legs historically here have been so aggressive they take you out anyway. So it really is a day trade kind of environment. So if like tomorrow, I would say that the likelihood that we head lower tomorrow to the downside, I would say 10 points are pretty much given the way the charts look today. However, I didn't carry anything short overnight. I do not have shorts overnight. I did really well this morning, basically waited for the opening range to come in, got the high end, and then I shorted some there. But the challenging part is when we have this kind of euphoria in the market, they really are lottos. And I'm trying not to encourage everyone to get on the wrong side of this or put in a position that can turn to zero really quick. We're having a hard enough time holding anything right now with the climate that's here. So I don't think we want to increase that down. But if you want me to post when I'm scalping, my scalps, I will, Robert. But I don't want to encourage that with market conditions that we're in. And I'm not going to say go long-term short here because I don't think that's the case. I think once the liquidity goes into SpaceX, right, either we end up in this huge bear market and then we will short off of that. We don't see any kind of recovery, no kind of sympathy plays in secondary names from SpaceX, right? Because I would think that happens. Right. So we should see a rally, which would squash any shorts that we have there. So until we know for sure the play out there, I just don't want to encourage that. And I'll agree with you being nimble because honestly, I'm trading small lots. I'm down to 25 contracts on SPY, and I'm still pulling out, 6 to 10% on my scalps. The reality is I'm still running small position size because I don't have the confidence that they're not going to run this because these dip buyers have been relentless. So let's shift gears here and talk about SpaceX. So we're looking at a massive pump and dump scheme as far as I'm concerned. Reason is because the hyperbole is based on SpaceX is going to take over AI compute. However, that's really not going to be the case because we have 100 gigawatts on the ground now. In 3 years, Tesla will build 15 to 20 gigawatts. By that time, we'll have close to 300 gigawatts on the ground. So you add in the dynamics of typically what happens in an IPO, I consider it to be very risky because the reality is retail is going to be liquidity for the institutions, and we know it. And that's the history of IPOs. So now recently, one analyst raised the outlook of Tesla by 227%. So actually Tesla, I want to see what Tesla acts like in this IPO. If it starts running on the IPO, I can tell you right now, I'm going to chase Tesla. So I will put that in the room because I do think that type of dynamic. We have a machine producing capital. I would rather do that, knowing that he's possibly going to merge it with SpaceX. I think it's a smarter deal. So that's what I've got, folks. Great trading. Until next time.